welcome back. You're watching Market Cafe, and now let's talk about the market participants' much anticipated move, that is the outcome of the SEBI meeting on derivative. Action from the market watchdog SEBI on the derivative space, which was much anticipated, and that's what spooked fear also yesterday, what we saw in Indian markets. Let's put the spotlight on the key announcements that was made yesterday. My colleague Anurag Joshi is standing by with all the key takeaways. Anurag, over to you.
Market regulator Securities and Exchange Board of India concluded its board meeting on Monday with several decisions linked to the capital and financial markets. Some of the key takeaways from SEBI's meeting include the introduction of a new asset class. SEBI unveiled a new investment product under the mutual fund framework, and this new asset class seeks to provide a professionally managed and a well-regulated product, and it seems to cut the spread of the unauthorized investment products that are offering unreasonable and unrealistic returns to investors, and also this would cut the risk that investors face. Now on rights issue, SEBI has proposed a quick issue of rights securities and the flexibility of allotting them to specific investors. The rights issues need to be completed in 23 working days. That's versus the average timeline of 317 days. And this is also quicker than the preferential allotment that takes 40 days. SEBI has also unveiled rules on MF Light, which means lighter touch regulations that include relaxed requirement on the eligibility for sponsors and also the promotion of ease of entry and encouraging of new players, and this will help lower the compliance requirements and also boost market liquidity. T+0, that gives the option for investors to trade in the secondary cash market, and the number of scrips that are eligible for trading under T+0 will be increased, and stockbrokers can offer access to the optional T+0 to investors, and institutions operating including the FPIs and MFs can access the T+0 cycle. Significantly for FPIs and ODIs, the ODIs or the erstwhile P notes, the segregated FPI portfolios, to have the same disclosure on par with FPIs, and the monitoring and compliance mechanism for submitting appropriate ODI subscription related information, and there's a proposal to mandate issue of ODIs via a separate dedicated FPI registration.
All right, thanks Anurag for that roundup coming in terms of the SEBI board meet outcome. But we also caught up with Sunil Subramaniam, market expert, on the phone line post the SEBI meet concluded. Let's go across and listen into what he also had to say then.
This should help expand the penetration of mutual funds, because what has happened is that the new asset class that has been brought about is intermediate between PMS and the regular diversified schemes. So many investors, because you have to put 50 lakhs minimum in one scheme in the portfolio management, this will now allow even people who have total 50 lakhs to put 10 lakhs in 5 different schemes. So what this is allowing is people who are willing to take more risk, but they don't have that much money to qualify for an AIF or a PMS, they are doing that. That's a very good thing. In fact, it should help expand the industry. I think all these regulations are favoring mutual funds, and I think SEBI's direction is to make more and more of the F&O traders and the retail equity buyers to use mutual funds as a vehicle to access the equity markets. And I think these are all more steps towards that direction. I would welcome this. What's happening is, within 300 days time, between the time they launch, the purpose of the rights issue, the end use of the funds, all that could change. And investors who are early in the stage will get a very different experience to those who join later. By keeping a 23-day window, you're making sure that whatever is filed in the prospectus, in terms of the end user funds, the money can be raised quickly and deployed. So I think that it's very, very critical that linkage between an investor's interest and the actual end user funds will be now more protected, and this will help in efficient capital markets to perform well.
All right, looks like there should be a relief that nothing significant or what was spooking fear in markets didn't come from the derivative space, though there were a lot of other announcements. Moving on.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them, become something more. It's my time to rise.